Welcome to Drill Down Earnings. We have the latest quarterly results from Alphabet, and they are good, and particularly in some little areas in this business we want to look at. This is a business story behind one stock on the move. I'm Cory Johnson, Chief Market Strategist for Epistrophy Capital Research, and we look at Alphabet. We try not to say Google because the ticker is still GOOG. It's more than just Google search. There's a lot going on here. Wall Street likes a beat or a miss, and this was certainly a beat here. Third quarter results from the company. The consolidated revenues of all of their businesses were up 15%. So growing and growing at a much faster pace than it has for years. Really impressive, and very profitably as well. So well over $80 billion in revenues for this company. And their services business, which includes search and everything else, but just growing fantastically. Again, 15%, and operating income up 34%. So even as it grows really fast, it becomes increasingly profitable. And isn't that a nice thing to see? Operating margins now at 32%. They were really good at 24% 2 years ago. Now look at that. Now this business is still dominated by search, 56% of revenues in search. But I want to point out two things. Let's dig into two areas. I want to look at YouTube ads, which is 10% of revenues, and 13% of the business coming from Google Cloud. So Google Cloud at 13% of revenues was really the exciting story here, because that growth rate had been coming down. How could it not? Well, it's been re-accelerating now for 4 quarters in a row. 35% year-over-year growth in Google Cloud is fantastic. Just a very powerful quarter from this company. And you've seen some gradual diversification in this business. Yes, search still dominates, but you see YouTube's grown into real business. Google Network is shrinking a little bit, but Google Ads doing well. Google Cloud doing great with a fantastic growth rate. Now, there is a note of concern here. The YouTube ad business is still growing. It's growing nicely at 12%, but not at the increasing pace it had been. So last quarter, we thought it might be a hiccup. This quarter, now 2 bad quarters, or at least declining growth rates in a row. Not a terrific thing. Now we look at the overall results. After the numbers came out, the stock went straight up 5% in after-hours trading. After going up 38%, pretty good for the last year, well better than the S&P 500. Now I'll also note that this company, so fantastically profitable. One of the things we see here is that by buying back shares, they've even further boosted earnings per share. And we can calculate how much. If you kept the share count the same as what it was in December 22, the earnings per share would have only been $1.95. Instead, this quarter, they were $2.12. That's 9% better return to shareholders on a per share basis, which again shows the use of that cash going into buying back shares, even as they're issuing shares, but the overall share count coming down, meaning earnings per share goes up, even as earnings are going up. And isn't that a nice thing? Well, the real story here is the use of AI and how it's pushing the use of their cloud products here. And Sundar Pichai talked about that on the conference call. We talked about the AI tool Gemini, how they've rolled it out in so many ways already, but they're about to roll it out a whole lot more.
Look, I definitely think it's an extraordinary opportunity, and I think the company productionized at scale, on our architecture, and that's what the Gemini era was about. So there was a fixed cost of getting it all set up and getting the Gemini era underway. But now I think we are in much more of a virtuous cycle with a lot of velocity in the underlying models, which is progressing well. So now, all the 7 products which have 2 billion users each have done their first versions of incorporating Gemini, and there is aggressive roadmap ahead for 2025. But then we had to do this when the company evolved from desktop to mobile. We are restructuring the company. Effectively, if you think of Google as a neural network, we are forming new synapses, which work much better to adapt to this moment. And I think that sets us up well for the year ahead. And we are bringing all of this innovation to the outside world through cloud as well. And so we are going to do that. And so that's an additional opportunity at this moment.
All right, what's this all mean? What's our big drill down earnings takeaway? Well, we've got those numbers to really remember what happened in this quarter with Google. So Google third quarter earnings. Here's what really matters now, your essential summary. Really strong growth, 15% in revenues across the board, I should say, for Alphabet. That's the parent company here. Cloud revenues, though, up 35% to $11.4 billion. I think that's the real number to remember here. The drill down earnings bite, one number that tells us a whole lot is that the Google Cloud business growing at 35%, so much faster than YouTube, even faster than search. Powerful quarter for Google Cloud. All right, thanks for listening to Drill Down Earnings. I'm Cory Johnson.